Good morning, everybody, and welcome to OptionPit.com. I am Andrew Giovinazzi, COO of OptionPit.com. On what looks like, anyway, what's starting out as a rally Thursday. Here's Mark talking Facebook, Apple, pretty much all over TV yesterday. He did 3 shots on television. So anyway, catch him on the business channel if you are watching TV. Anyway, well, what do we got? We got a rally. Why do we have a rally? Well, or just if you look at, oil's rallying. Real simple. It looks like there are rumors of Russian and OPEC basically getting together and and trying to cut production. I don't know if that's really going to be happening, but at least for VIX, and this is we talked about this a little yesterday, you want to see some lower lows, and we put in around 21. Let's just pull up the tick chart from yesterday. Right, so what do you want to see? Again, since we are so tied to oil, everything essentially is there. So we're still not at the lows of yesterday. And as you can see here, just from the simple vol-of-vol chart, we're still, volatility is really, again, aside from some, a funky data print or something, let's see if we can actually kind of, have the vol-of-vol really is one of the better signals of just having things go down. So, or having the market or expectation realized vol dropping. So if we can get some sort of stabilization in oil prices, that would be one thing. The fact that Chinese equities seem to be in free fall, but the economy is not as terrible as everybody thinks, that seems to be less of a story. Oil really is the last thing, and I guess the Fed didn't give anybody what they wanted yesterday. However, there was a bit of a sell-off, but there's some recovery. So I guess the oil story we're still tied to the oil story. It's just how volatile it makes our market. And I think that's kind of the bottom line. But we've had good earnings in I guess Amazon, they like them. Amazon's not as much as it has been in the past. Apple's recovering. Facebook surpassed $1 billion in earnings, making that an earnings generating machine now. And another market darling here looks like Under Armour did okay as well. Still waiting for Microsoft, still waiting for Google. And we'll check out some stuff in the chat today, see if there's anything interesting. But this could be right. If we get this oil to stabilize somewhat, we could finally see VIX below 20. It feels like the market wants to sell off volatility. It just, every opportunity there is to do it, there's yet another surprise out of oil. But I think so. For the most part, stocks have been orbiting. So, in the past year, kind of when there was always the hope of the Fed doing something. If you look at how we've traded, right, there was that Fed getting us back to now all of a sudden, with no Fed, we're not getting that kind of breakout like we did last time. So when in August into September, we're about a month into this, right? Not quite getting right the sort of rallies we've had before because of Fed non-intervention. Probably having equity markets not go moonshot again might be an intention by the Fed at this point, right? It's got to go back to the good old days from John Houseman. You make money the old-fashioned way. You have to earn it. Stocks now have to start generating good earnings and revenue for them to go up. So it's appearing that the QE is coming out of the market, and in the past that's always been those killer rallies. And for a couple years, actually, the rallies were more volatile than the sell-offs. And we're kind of going back to sort of the old way of business at this point, where when we sell off, it's a little more ugly. And after being conditioned over the last few years to the Fed or the EU, they're basically just going to let things, it looks like they're going to let things run a little bit. And it's just the market will just trade at a slightly more volatile level, I think, because of it. And if all the oil companies don't blow out, then that we probably won't see more highs. So, trades, we looked at iron condors yesterday. I think the vol products now have a little more potential to run. So the long vol products down, short vol products could do a little better on the upside. We could start looking at us again some commodity plays. We start looking at those. There's been a little bit of life in them, and quite possibly, right, the financials could be kind of a little closet long, because the Fed really is going to stick to their plan, and they could, right? Because fundamentally nothing's really changed except for lower oil prices. A lot of these financial company stocks, even with pretty decent earnings, went straight down. And I'm not looking for a big jump back, but we did look at some, cheaper strangles, things like that in here, kind of betting on the Fed, and maybe we see some continuation. All right. So that's what we got for today. I mean, the rally's probably as good as the rally in oil, but we definitely got some better earnings out of some of the market leaders today. All right. And with that, I will see you all in our chat room a little later. Also, start looking for our event page for all of you who are new to options. We are having a beginning boot camp in late February. So that is coming. It's about 3 to 4 weeks away at this point. All right. All right, y'all. Have a good morning, and I will be seeing a lot of you in the chat later.